What's good? What's good? Welcome back to Invest and Trade with Jax. We're going to go over our friend Matic. Not too much movement in the last 24 hours, but there is some important bullish and bearish scenarios I want to go over for Bitcoin in this video as well. So currently we're sitting at 257. We're down about 2.77 on the day. We're sitting at a market cap of 18.11 billion. Yeah, my dyslexia makes me mix up my numbers sometimes. So the 24-hour volume is sitting at 2.76 billion. Ladies and gentlemen, if you're new to crypto.com, sign up to the world's fastest growing crypto app. You can grab one of the incredible Visa cards for cash back in crypto, free Spotify, Netflix, Prime, travel incentives, depending on the level of card that you have. So let's get into Matic, guys, on the 1 hour time frame. Our first buy zone was here at 252. I've decided to switch it to green just so you know when we hit our buy zones. Hopefully you like that. Let me know in the comment section if you do or if you don't. But green, it's the color of money, so I thought it would be a good color to use. So we've hit 252, guys. Now we do have some bullish divergences. You can see we've been creating lower lows on the price action, higher lows on the 1 hour RSI, as well as on the money flow, which usually signifies that the bears are running out of strength. Of course, it can be invalidated, just like we have our bearish divergences, our bullish can be invalidated. It is an early indicator of move back to the upside. Just as we saw here, we had a bearish divergence creating higher highs on the price action, lower highs on the RSI, money flowing out of Matic, and we saw a pullback. We saw a little bit of a drop. So now we're seeing this. So now we're seeing the price dropping while money is flowing into Matic and the relative strength is increasing, usually signifying a reversal in the trend. We also have a double bottom. We've come down, we created a bottom, second bottom. So if we can come up and break this neckline, could be a nice little juicy breakout all the way up, pretty close to one of our take profit zones at 290 and pretty close to this previous swing high, but we do have to watch for the possible head and shoulders pattern. Here's your left shoulder, guys. Here's your head, and we may see a right shoulder start to form. If we come up, we hit resistance. That's why I've dropped in a take profit zone right there. We could form a head and shoulders pattern, so do keep an eye on that for Matic. Another thing when you see these divergences, especially on the hourly time frame, is you'll see consolidation where you'll just trade sideways and it will literally allow the RSI to come back up to hit overbought and then it will come back down. It happens when you're in an uptrend as well. You'll see a bearish divergence, but instead of price dropping, you just see consolidation before seeing the next pump. So in a downtrend, what can happen is you'll see consolidation and then you'll drop lower, all right, guys? So do keep an eye on that. If we do see a nice bounce here, take profit zone is 272, which is a nice little trade of basically 8% for Matic. Just watch for that double bottom pattern. We are back underneath the EMAs and currently hitting them as resistance. So let's jump over to the 4 hour time frame. So we can see here on the 4 hour, the money flow is in the floor. And that's when you're going to see money start to flow back into Matic, just as you did right here as well, right here as well. Let me just open this up, give you guys some examples. So right here, saw a push back up. Money flow was in the floor right here, push back up. Money flow in the floor right here, push back up. So we're in the floor once again. So sooner or later, we will see a nice push back up. We're trending, we're not quite oversold on the 4 hour time frame, but we are trending towards the bottom section here. If we pop over to Matic on the daily time frame, we talked about that resistance at 293. We hit it perfectly. So we do have to keep an eye on that ABC. I'll just leave this in here. If we come up and we get rejected by the previous all-time high, we could create an ABC correction. That could bring us back down to the support of our ascending channel here, which would come in, let me move this down a little bit, come in right around $2.13. We have that bearish divergence that we've been covering on the channel. We have that bearish divergence that we've been covering on the daily, or creating higher highs, lower highs on the RSI. We'll quickly take a look at Ethereum. I was talking about this falling wedge pattern. I said, watch this trend line. Previous level of resistance could now be flipped as support, and we've come right down to it. We've trended right towards oversold on the 4 hour time frame, and currently we're holding support. We saw a bit of a wick down here. So the bears try to shoot the price down, and the bulls are like, I don't think so. They push it back up, and that can signify a reversal and a push back to the upside, just as you saw here. Wick back down, the bulls push the price right back up, and you see a nice little push back to the upside. So do keep an eye on that. If we pop over to this chart here, we had our ascending channel. We broke down and we've come all the way back down, very, very close to our target, which was the bottom of our channel where we formed the channel at 3642. And you can see here the bears trying to push the price down and the bulls step in, bullish volume, a lot of bullish pressure to push it right back up. And that can usually signify you're going to see a reversal. Now, I don't mean you're going to see a reversal and you're like, shoom, go all the way to 8K. I just mean that it usually signifies that you're going to see a push back up. We could get rejected by the EMAs or we could get back above them and hold them as support. But I'll give you some examples. Right here, we wicked down, we pushed back up. Right here, we wicked down, we pushed back up. Right here as well, wick down, push back up. It just indicates that the bears are running out of strength. And there's a lot of bullish pressure and bullish volume to push the price back up. So let's get into Bitcoin, guys, because there's some important things that I want to show you guys here. So yesterday we were talking about that fake out. I said if we fall back into the pattern and we lose the level of support from our falling wedge, and we have to target these levels of support, 47.8K, 46.4K, had some support here at about 45K, as well as 43.5K. And as of right now, we wicked down pretty close to 46.4, and we're currently trying to hold the golden ratio as support, which is coming in at 47.8K. Now, it's very crucial for the bulls, if we're going to see continuation of the uptrend, for us to hold 45K, because as you can see right here, we created a low, we've created a higher low, and if we hold this level of support, then we've created a higher low once again, which is a signal of an uptrend. You've created a low, you've created a higher low, and you've created a higher low once again if we hold this level of support, and you've created a slightly higher high. So here's your high, guys, and here's your higher high. So here's your high, guys, and here's your slightly higher high. So uptrend, higher highs, higher lows, downtrend, lower lows, and lower highs. But if we lose 46.4, and especially if we lose this low, which is coming in right around 45K, we're going to reverse the trend, and that's pretty bearish for Bitcoin. It could signal a much larger continuation to the downside. However, guys, we have trended towards oversold once again. You can see the bears tried to push down the price. We wicked down. The bulls shot the price right back up. So we may see a nice bounce back to the upside. If we can get back above the EMAs, then that would be a really strong signal. We come up and break this high, that we're going to see a continuation of this uptrend. However, guys, if we get rejected, we start to roll over, we lose this low, that is a pretty bearish signal. And the reason that I'm saying that, guys, is because we're underneath the 21-week moving average, which is this white line right here. So we're going to look at previous bull runs. We're going to go all the way back to 2013, 2014. So here's the peak of our bull run, guys. We start to sell off. We come underneath the 21-week moving average. We have a nice rally. We break back above it, but then we break below it once again, and we go into a bear market. So we're going to go to present date. It's very, very similar, guys. We topped out here in April and May. We had our crash. We had a relief rally. We came back above the 21-week moving average, and we've fallen below it again. So if we stay below it, guys, and we get rejected by the 21-week, maybe we come lower, we see a relief rally, and the 21-week comes like this, we get rejected again. That's a strong sign that you're going to head into a bear market, just as we did in 2013, guys. So check this out. I'm just going to remove those lines quickly. All right, guys, so here's 2013, 2014. We broke below it, relief rally. We held it as support, but then we lost it once again. We went into a bear market. Here's present day, guys. We broke below it, relief rally. We held it as support, but we've broken underneath it once again. We lost that level of support. So if we don't get back above it relatively soon and we continue to hit the resistance, it's an early sign that we're going to go into a bear market. Here's 2017, 2018. We broke below it. We had a relief rally. We got back above it, but then we fell below it again. Relief rally, hit it as resistance, bear market. And now in 2021, going into 2022, we broke below it. We had a relief rally. We got back above it. We held it as support, saw a nice little pump, but we've broken below it once again. So I think it's really crucial within the next few weeks or so that we get back above the 21-week moving average if we're going to see continuation here on this bull run. However, guys, we may not go into bear markets like we have in the past where they lasted a year, 2 years. What may happen is we do a little something like this. We come down and we retest about 28K. Maybe we see some consolidation, and then we see our continuation on this bull run. But if we were to come down and lose 28K, that's pretty bearish, guys, and could signify that we're going to see a longer bear market. However, the bullish scenario, we push back above the 21-week moving average, we hold it as support, and we see continuation on this bull run. So that's why I'm saying it's very crucial for us to hold 45K and continue to create higher highs and higher lows, because if we start to lose 45K, we lose this swing low, this wick low, about 41K, to the low 30Ks, 28K. And if we lose that low, let me pop it back open here. Actually, let me look at it on the daily. Let me quickly pop over the daily time frame. All right, guys. Yeah, so we come down, we lose this low, about 40K. And we see a reversal all the way back down to our swing low in the summertime, which is coming in right around 29K. But if we were to lose that low, guys, that's pretty bearish, and we would have to target. But if we were to lose that low, guys, that would definitely signify a bear market. Even here, if we lose about 40K, we could come all the way back down to 29. And if we didn't see a bounce back to the upside, then we're reversing the trend, and would signal we're going to go into a bear market. But as of right now, guys, we're creating higher highs and higher lows. You have a low, you have a higher low, you have a higher low. Once again, you have a high, you have a higher high. So if we can see a nice bounce from this level, get back above the EMAs, break out of our falling wedge once again, then we're good to go for continuation. And this was just a bit of a fake out, come back down to support, create a strong level support, break out back to the upside for BTC. I know this video is about Matic, but of course Bitcoin controls the market, and Matic is the #1 coin that I trade and that I focus on. So I like to go over Ethereum and Bitcoin as well in my Matic videos. All right, guys, so our dollar cost average buy zones, we've already been entered at 252, 226, 206, 175, 151, $1, and we have a fail safe all the way down at 75 cents. And then your take profit zones 275, 293, 34, 411. Equal amounts as a spot trader to bring your average price down halfway each time. If you enter at 252, equal amount at 226, your average price is going to come down to about 237. Double your margin as a leverage trader. You're buying in as it's dropping, and you ride the slingshot back up. Even if we go into a bear market, it works in waves, and we're making trades, we're making money the whole time. All right, guys, that's it for this one. Bull run targets for Matic. We have the 1.618, which is my bull run target at 677. And the 2 extension at 1181, and the 2.272 at 1767. Of course, guys, those will be invalidated if we come down and we lose this low for Matic, which is sitting at about 62 cents. But as of right now, we're in an uptrend. We're holding the EMAs, and until we see strong bearish signals, nobody can tell you that we're going into a bear market. It's not until Bitcoin starts to lose structural support, starts to lose this swing low, comes down and loses 29K, okay, we're going into a bear market. But until then, we're holding support, we're creating higher highs and higher lows, and we're still looking strong for continuation as long as key levels of support are not broken. All right, guys, that's it for this one. Smash that like button. Oh, if you want early access to our DCA charts, they're here in the Discord, updated regularly, guys, for many coins. And I don't make videos on all of these coins every single day, but the charts are here for your reference. It's the price of a coffee. Also 1,000 members talking all things crypto, and you can sign up to the Patreon. Check out Bybit, that's where I do my trading, crypto.com, and I'll see you in the next video. Much love. Take care.